Glad to know you're still with us. Naira closed the January 30 trading week on a strong footing, with the dollar sliding to 1,386.55 kobo at the official foreign exchange market. Its best showing in nearly 2 years since the introduction of the electronic foreign exchange matching system. But analysts warn the rally may be short-lived as speculation around Donald Trump's Federal Reserve Chair nominee, Kevin Warsh, raises fresh risks for emerging market currencies. Adding to the volatility, the greenback recorded its biggest rally since May after the announcement, while traditional safe haven assets suffered sharp sell-offs. Gold tumbled below $5,000 per ounce, and silver plunged 30%, its steepest drop since 1980. Were investors merely booking profit, or is there a connection between these sequences of events? What does it mean for the Naira? To unpack this, I am joined by Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill, Denham. Thank you so much for joining me today.
Good morning. Thank you very much, Professor, for having me this morning.
All right, just like I said during the introduction, the greenback firmed up in a manner last seen in May, while we also saw metals sell-off. Now, were investors merely booking profits, or were they just reorganizing their portfolio? Or would you say these events are solely linked to Kevin's nomination?
Well, I think I will go with the last statement around the nomination of Kevin. Because before now, one of the reasons why most investors were actually moving into commodity was on the back of the fact that they expected a nomination of a dovish U.S. Fed chairman, considering the direction of the current U.S. president. And if you have actually followed the story, you know, one of the reasons why President Donald Trump is looking to actually bring another Fed chairman is on the back of the fact that he expected more rate cuts, which is not actually coming forward. So the expectation is that we'll likely have a more dovish U.S. Fed chairman. And on the back of that, a lot of investors were already moving to commodity. And knowing fully well that when that happens, it means that the dollar will weaken. And on the other hand, so it means that this commodity will actually reprice higher. But on the contrary, when the announcement was made and Kevin Warsh was actually mentioned as the new U.S. Fed chairman, of course, it took a lot of investors by surprise, considering the accident of Kevin Warsh as a very hawkish member of the committee. Of course, he's even more hawkish than the current U.S. Fed chairman, that is Jerome Powell, and it's not even as pragmatic as Powell. So markets is of the view that it means that rates will likely stay longer than expected, and if that is the case, and it simply means that we'll actually continue to see a much stronger dollar, and that will also affect other currency that actually pair with the dollar. Kevin is more inflation-driven. He is someone that actually considers inflation in every of his statements. We want to see more like an environment where rate is actually used to actually tackle the inflationary pressure. And if that is the case, currently inflation is still sticky in the U.S. as we speak currently. So it simply means that we will not see any aggressive rate cut as expected.
Well, it remains to be seen what that is, because I know that before now there are reports that he's hawkish. But I mean, in recent times, we're hearing that he might be leaning towards, you know, Donald Trump's dovish style, and that might be why Donald Trump decided to nominate him. It remains to be seen how that will pan out anyway. But talk to us. Let's look at the impact this will have on the Naira. How much impact will it have on the Naira and emerging market currencies?
Well, one of the problems, the impact on Naira and other emerging market currencies that we will likely see capital investor. What that simply means that we'll likely see a lot of portfolio investors that are currently in this environment actually moving back to the U.S. Or moving back to the dollar-denominated assets. What that will mean is that they will likely have to unwind their portfolio, and that will likely put a bit of pressure on the currency of these emerging markets. Let's take Nigeria, for instance. It simply means that we will likely see some of these guys actually dumping their assets in Nigeria and are actually outflowing their funds. What this will do is that will put pressure on the currency, and that also simply means that at the time the central bank may likely have to open their vault to actually bail out the Naira in most of the situation. And that's one of the reasons why we feel that this will actually have an impact on Naira. But the good side of it is the fact that currently, I'm sure the central bank is well ready for that because we saw something like this happen sometime last year. I can't forget the Liberation Day announcement on April 1st last year. We noticed the impact of that on the FX markets, and considering that our FX market is now more standardized, is more open, is more liquid, more transparent, and also price discovery is quick. We hardly see the intervention of central bank in that market during this period. The central bank allowed the currency to actually trade in way back to around the 560, 580 levels, and after some time, the market actually saw correction, and so I think that it will put a bit of pressure, but nothing so great to actually cause any panic.
And this will be based on some domestic factors, aimed at ensuring that the Naira maintains its stability. That's what you're saying, right?
Yeah, exactly.
All right, let's move to gold. Now, I mean, it has become a key asset for central banks, with countries like China rapidly increasing, their reserves while also cutting back on U.S. Treasury holdings. Many sort of see this as a strategic shift in anticipation of a more fragmented global financial system in which dollar dominance can no longer be assumed and access to dollar assets could become a geopolitical tool. What do you think? Is that something that's happening so soon?
Well, I think, like I mentioned earlier on, a lot of people are actually moving to more like a safe haven assets and commodity like gold and of recent silver has actually joined the league of this asset. And what most people are trying to actually do is that when you are now currently in an environment where statement comes out from the United States regularly, we've been seeing a bit of crisis between the United States and some other countries. Even the Eurozone are not actually exempted of this crisis. We've seen tariff war, we've seen a lot of this uncertainty. And the best way to actually hedge your portfolio is to actually stay out of some of these things. And the best way to stay out of it is to actually stay out of dollar-denominated assets. And that's one of the reasons why China actually cut down on their investment in the U.S. Treasury. And it makes a lot of sense because what if the United States lose any of these battles? What will be the impact on the economy? What will be the impact on the currency? And what will even be the impact on my current asset holding? And that's why a lot of people are actually diversifying away from the U.S. dollar. And if you say that it's becoming political, I think I will actually agree with you to a great extent because when you see currently what's currently happening globally, of course, it makes a good sense for someone to actually try to actually hedge yourself. And that's exactly what the global investors are currently doing.
Well, do you see the U.S. hegemony breaking anytime soon?
Well, I would not say that it's not impossible. It has never been the U.S. ruling the world from the time memorial. It was at the time, it was the time of the Roman Empire. At the time, it was the Greeks that were ruling. And currently, the United States are actually calling the shots. But I think that in times like this, U.S. needs to be a bit careful because you have all other strong nations like the Chinese, you have other the Eurozone as well, and you have all big countries also from the Middle East as well. So I just think that U.S. needs to be a bit careful. I feel that the time where we all need to embrace that peaceful deliberation where we all sit on the table and actually deliberate and see how can we move forward beyond actually having the crisis. Because if that is not done, I think that's what we are doing. We likely weaken the entrepreneurs.
All right, do you see gold and silver reclaiming the spot or where they were before now?
Well,
I mean, looking at this month.
One thing about what I know about market is the market has memory. It might not be now, it might not be this month, it might not be in 2 months' time. But this commodity has actually tested that level And because market has memory, they can actually retest that level. And don't also forget that they are now already becoming like alternatives to holding the greenbacks. And like we actually mentioned earlier on, if the United States does not in any way reduce the level of aggression across the globe, there's every tendency that we'll likely see more like that. That Martini, where a lot of countries may likely want to actually call down on the utilization of U.S. assets as a hedge, and they may likely move into commodity. And if that continues, it means that we'll likely see the market actually test that level again.
All right, thank you so much, Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill, Denham, for joining me on the show today and sharing your thoughts.